Welcome to the Tax Endgame with Mark Kanakaris from Cherokee Tax Group. As an advanced tax strategist and enrolled agent licensed by the Internal Revenue Service, Mark is uniquely qualified to go deeper into the revenue codes than most accountants. He understands and interprets the provisions on how you can legally save on your personal, trust, and estate taxes. Now you can reroute those wasted tax dollars. Mark provides business owners, professionals, and individuals the guidance they need to prepare their taxes today for better tax planning tomorrow. Using a solutions-driven and unique holistic approach, Mark breaks down the loopholes around tax planning and preparation along with must-know financial planning and tax reduction techniques. Listen in as we tell you what no one is going to tell you about taxes. Now, on to the show.
Welcome back to the Tax Endgame, where your host Mark Kanakaris talks about everything taxes and what you could be doing to even the playing field with the IRS. I'm Patrice Sikora. Mark, everyone may complain about what they owe when it comes to taxes, but isn't some of it their own fault? I mean, how many people really develop a tax plan?
Well, Patrice, that's a great question. I say part of it is definitely the taxpayer's responsibility. The IRS would say it's totally their responsibility what taxes they pay. So I'll back off and just give you one little side note. Even though a lot of people hire people like us to do their taxes, at the end of the day, the taxpayer is ultimately responsible. However, people don't know what they don't know. They don't realize the importance of a tax plan. So they actually meet somebody who does it and can show them, hey, here's a ballpark estimate. If you don't do this, what will cost with taxes? The old CPA game when we went to college, years ago was you do taxes for money, but to pay the bills, but the real money is made doing consulting. Well, you know what? I don't believe in that business model. I think it's wrong. And I think the real money is made is really doing the tax planning for clients. When you show people what they can really save, they're willing to pay for it. Now, granted, we've added financial services to what we do, so we can have a more powerful effect in tax planning in general. But there's you got to win one of the two games. You got to win the long game or the short game, the battle of the war. You got to figure out what's more important to you.
All right. So what is a tax plan anyway? Why is it important and what would it do for you?
Well, let's take tax planning from two different perspectives, and let's just use retirement because that's when life really has a change. So when you're younger and you're working, I would say your ideal is to keep your taxes as low as possible, get your returns. You're probably raising kids, you're paying a mortgage, you're saving for retirement. It's tough to do everything right. Now, I would argue, though, if you met a guy like me at a younger age, you would never get involved to the traps of the people I'm fixing on a daily basis who have saved improperly in the wrong kinds of accounts, and they're going to get hammered when they retire. The people in retirement need to look at the fact that their biggest expense in retirement is going to be taxes. So they can either hide, their head in the sand and just try to be, that year efficient, or they go, hey, I tell clients, they come in and they show me, hey, I'm 65, I retired. Let's just say they've got $1 million. I says, and if you don't need that money in retirement, you'll be taxed at least $800,000 while you're alive, not to mention what your kids get. It's ridiculous. And I don't know if just tax people are lazy, but since we build our practice around it, it just becomes a natural next step.
Now, you made a statement that taxes always come in the side window. What do you mean?
Well, we have the most complicated, to me, the most sophisticated tax code out there. So there's no just coming in the front door when it comes to taxes. You're always looking for a loophole, an open window on the side of the house or on the second floor. It's not the easy way. If it was easy with taxes and tax planning, everybody would do it. But when the code is this sophisticated, you have to have somebody who knows all the side games. You have a lot of control of your taxes, the most control within reason, because there are some basics you're going to have to pay. But you've got control over everything above that. And people just kind of like ignore it and they think, oh, it's a couple of thousand. Well, multiply a couple of thousand over the next 30 years. Do you want to save $60,000? I don't know. Is that a lot of money to you? To me, that's a lot of money.
My hand is up. Yep, I'll save it. So you also say, though, everything is driven by taxes. What do you mean by that?
So on the big scale, first, everything's got to go through your tax return. Every penny you make or have saved and going to use in retirement, it's going to go through the tax return at some point. There's only a couple things that will never see the light of day of a tax return. And that's where a good tax planner can show you how to do those things. And I'm not here to talk about specific products or tactics per se, but at the end of the day, everything has to be dealt with by by your tax return. The IRS is going to get a chance to pick and choose over some of your money. So you need to control how much interest they have. I was talking to a lady the other day, and she said, when I pass away, I said, you can have so much money, and understand that the IRS will get more money than your kids.
What? Really?
Well, if you have 2 kids, and in the state of Georgia, let's say you die with $1 million and you don't do any tax planning and your kids cash it in, the whole $1 million, state of Georgia is going to get money, the federal government, both kids will get about $300,000 and the feds will get $4 million.
Wow.
At the end of the day, that's how the math works out. The IRS becomes most people's biggest beneficiary, and they don't even want them in there, but they do nothing to get them out. And the rules are there. It's clear. You can go use these rules in your favor. You just got to use them. You just got to kind of get off your butt for a few minutes and talk to somebody. And it's usually not big stuff. It may be just, I need to set up a trust, or I need to fill in a few different forms, or I need to pay this a little bit differently than what I've normally paid it so I can get those deductions. You can nickel and dime back the IRS the same way they nickel and dime us.
I like that. But you just mentioned trusts. Tell me the difference between a trust versus a will. Which one would be more tax advantageous?
Of course, first I have to say I'm not an attorney, but I do work with several of them. But, everybody needs to have a will. They've always said, Mark, everybody has to have a will. A will is going to go to probate. And if you don't have a will, then the state gets involved. So in the state of Georgia, if I was to pass today, you would think, well, gee, Mark, doesn't your wife get everything? It depends. Anything that doesn't have a beneficiary tied to it is going to get split between her and our kids. Mm-hmm. So she doesn't own some things outright unless it's in our will. Now, a trust is a more advanced form of a will. It's very good for privacy. We talk to our clients who are a little bit wealthier, like, do you want everything in your will to be public information? Of course, everybody says, no, I don't want anything public. Well, in a trust, all the will really says is everything I own, I give to my trust. But nobody knows what you own because it's not mentioned in the will. And the trust really becomes the will. Now, the trusts we use in tax planning, and there's a variety of them, and unfortunately, we have tons of acronyms because the names are really long, but we have a lot of CRTs and LFTs and asset protection trusts and NIM trusts and flip trusts and all different ways for people who've got money that want to maybe use it, but they want to minimize the taxes. And some of them are a little bit charity oriented, and you don't have to give all your money to charity to use a charitable trust because there's different kinds. And the ones that are more popular, I think, are very heavily influenced by what we call the discount rate in the market. But like right now, if people set up, some sort of charitable grantor annuity trust, and it's not an annuity, but it's just the name of the trust, where you give the income of your money to a charity, you get big upfront tax deductions today that most people don't get at all. So my people who are heavy givers to churches and charities, it's usually right up the rally. And usually we can throw in a Roth conversion as we're doing it. And now we're getting stuff out of the IRS's hands and back into ours. There's some more advanced trust if you want income in retirement, where you can get the income tax free, but you have to leave a balance for charity. And there's different ways that we deal with that as well. Obviously, nobody wants to, start one of those things, die the next day and everything with the charity, never get to use it. There's specific provisions that says so much money has to come out regardless, and whatever's left goes to charity, which is fine. So there's a lot more to the conversation, but without having a good conversation with the tax planner, you could use the wrong one. And our last one is our asset protection trust. And there's different kinds up there. And a lot of people, they get lost between ownership and control. And, ownership is nice, but control is what's most important. So when you have like an asset protection trust, there's certain kinds that we use, especially for those really high income earners. Those are people making $1 million plus a year, $2 million a year, $10 million a year. They want control of their money, but if they get sued or get into trouble, we can have this trust managed by a trustee that the U.S. government can't touch. And you don't lose it. So, there's some really powerful things, control is sometimes more important. I mean, we all like to own stuff, but controlling it is just as good if that controllership is just putting the ownership in somebody else's name, but that has to do what you tell them to do. You really have ownership. It's kind of an implied ownership, if you will, but it really is yours at the end of the day.
That takes on a whole new mindset, though. You have to come around to the fact that I may not own it, but I do control it.
Well, when you control it and you can sell it and take the money back, then you've put it back in your pocket. It just looks like on paper, it's not owned by you. I mean, why do people put rental property in LLCs? I mean, they don't own it, but they own the LLC. They control the LLC. That the LLC is now the owner, not you, but you control the LLC. It's that same kind of concept with some of these asset protection trusts. Again, for those of really high net worth, may not really work for people with just a couple of $1 million, but those high income earners, it's definitely if you don't have one, it's almost like a why. What has your attorney been telling you all this time? What kind of garbage he's shoving you when you don't have these basic things in your hand? And, every year we sub on a couple of folks that are at that level of income. And it's usually one of the first things I ask is, why aren't you, using an asset protection trust? And they look at me like I asked them, why don't you have 2 heads instead of 3?
And the answer?
It's that deer look in the headlights, huh? Scooby-Doo, what roof?
Ruh-roh.
Yeah, ruh-roh. I'm in trouble now. And the IRS, they expect you to do nothing. They really do. They just figure people are lazy and they'll pay it, and they're going to be the winners at this game. And it's so easy to beat them if you just take a little bit of time and find the right guy.
And that brings up the question of time. Now you say is the time to do tax planning. I mean, is this just a generic now, or is we're looking ahead toward tax season? And
20 years ago was the time to do tax planning. But, now we're in some of the best tax laws. We still have a few years left of the Trump discounts. There's still so many great things we can do this time. But if you don't do it when the laws change back to what we're used to, you're just going to pay that much more. I mean, the problem is people didn't understand tax planning when they started saving and doing financial transactions at a level that they needed to really pay attention, because there's nobody running around saying, pay attention to your taxes, do tax planning, because it's back to that 3 blind mice. You have the lawyer, the accountant, the financial guy. They don't meet together to cohesively go, what can we do to make this client's life so much better? And that's where the big problem comes in, where we have 2 of those 3 people in our office to make sure that it isn't the problem. We know enough about the legal guy to tell you which one to go talk to. We got a good partner now, Barry Quinn out of Fort Lauderdale, is one of the hotshot lawyers out of Wall Street. And, we talk about this stuff all the time. And he's like, it just blows him away how many people just don't do the right kind of tax planning and use the right kind of trust. And he goes, trust me, Wall Street, they're all over it.
Well, how can you tell if someone is a tax planner?
I'd tell you simple, because if you go to like a tax guy and go, what can I do to reduce my taxes next year? He'll say something like, well, put more money in your 401k. Well, what else? That's a given. Everybody knows that. H&R Block puts it on the commercials and they show it. Oh, well, if you put $2,000 in your IRA, you'll get another $400 back. Well, that's all well and good, but that's not tax planning. You got to ask questions. What is things like, if I don't do anything different, what does my long-term tax bill look like? What can I do this year to have a permanent effect on my future taxes? It's almost kind of tell me what I don't know, but most guys are there's no class in college, at least the college kids I've interviewed coming out of Kennesaw State, saying, hey, yeah, we had a class in tax planning. They got a clue what I'm talking about. What do you mean tax planning? Well, you better think about next year. I mean, yeah, I'm sure there's some good CPA firms out there and EA firms out there that do a lot of it, but maybe more on the corporate side, but the people are missing out. I mean, companies pay for people, that's their job, to hunt down taxes and look for tax discounts. People don't think to do that. I mean, I would tell them, if you had to pay $500 your tax guy just to say, find out how I save $1,000 a year the rest of my life, it would be money well spent.
So what is a key question to ask? I mean, for just a guy off the street coming in and talking to you, okay, he's got maybe a couple million, so he's not coming right off the street, but he's coming in and he says, what does he ask you to say to find out if you are a tax planner?
I actually have to show them. I would say, hey, Patrice, you're 65, you retired to get $2 million, you got a pension, you got Social Security. What are we doing with this $2 million? What's your retirement plan with this? Oh, Mark, everything's paid for. I don't need any of it. Okay, well, you've got about a $2 million problem here when tax between now and age 95. Do you want to pay $2 million in taxes? You want to pay $500,000 taxes?
I don't want to pay as little as I can.
Right. Well, I can't do it in one day, but I can do it over about a 4 to 5 year period where we can Roth convert all $2 million and the IRS can never touch it ever again. And if this $2 million becomes $50 million at time of death, guess what? Your family gets every bit of the $50 million minus any, national, federal state taxes out of there. And of course, knowing me, they would, the government wouldn't see a penny of that money because I would have it divided up in different things to make sure that the government couldn't tax any of it through different entities and different trusts that we could set up that would go right to the beneficiaries, and the government won't get a percent of that. And it's totally legal. It's just incredible how many people don't do it.
How long does it take you to learn somebody's tax situation?
Well, I'll get a pretty good idea in about 60 seconds.
What
if you walked in, I'm going to look at, look at your tax return, right? I understand what wages are. I can ask, okay, what's creating this tax exempt interest? I could probably tell you by the amount of tax exempt interest, how much money is probably in those bonds. I can look at if you have dividend income, I can kind of ballpark what you probably have in dividends. If the only thing that's not going to hit your tax return is going to be an annuity of non-qualified money and any life insurance. Everything else hits it. And, the only thing you kind of can't tell is if you just saw a bunch of capital gains and losses, you have to ask how it's invested to get a ballpark of, what those gains and losses were. And that could be the double-edged sword because they could have gotten hit with phantom income, but that usually I can get a good idea and ask a couple of questions. So if you've got, $400,000, $4,000 in dividends, you probably got about maybe $350,000 to $400,000 in stocks. And usually, that's about right because the average dividend is about 1.5%. So you kind of back into those numbers. If guy's got $1,000 sitting in interest from CDs, well, he's probably got a couple $100,000 sitting in a bank somewhere because we know CDs don't pay, but maybe 0.5% if you're lucky. So you kind of back into those some numbers. And then, of course, you got to ask some very direct questions. And you just got to assume they're going to be honest with you. Like, guys, this is just, we're kind of team huddle here. We're getting ready to go for the big play, but what's going on here? Which
prompts the question, do clients try to hide things from you?
I don't think so. I don't really ever felt like anyone's ever lied to me. And I've interviewed some clients that wanted to hire me that I don't think what they said they did for a living is what they did for a living. But for the most part, people don't want to pay more taxes. I think people find us to be a trusted advisor. We usually don't have any real skin in the game. It's not my money. And I'll tell them, hey, it's not my problem if you don't want to Roth convert. You're the one paying the $2 million, not me. So I don't think there's a trust issue. I think we're more trusted than lawyers and doctors.
Are there a lot of tax planners out there?
I don't think so. I think some people say they do, and I think they do some basic things here, but I don't think there's a lot of them out there because there's no one there to teach them. Unless you go work for people like I did, that's what they did. And they were like the forefathers of the industry. I just don't think there's a lot of guys who do that. I mean, I'm sure there's some who say they do, but then ask them, well, how do you do it? What are your tools or what are your methods? Do you bump the bracket? Do you do economic opportunity zones? You're looking at oil and gas. Are you doing large Roth conversions? Are you doing land easements? There's so many different things that go down and people don't know unless they've even been researching. And the problem is until I decided to start writing our book, there really is a publication to read about tax planning.
Tell me about the book.
Well, book's getting started. We're obviously going to name it after our podcast, The Tax Endgame, and we're going to really talk about taxation and ways to save on taxes at different levels of income because a guy who's maybe saved a couple $100,000 does not need the taxing of a guy who saved a couple of million versus the guy who's got $20 million. They're going to do very different things depending on their goals because the money sometimes becomes irrelevant if I don't know what you want it to do. And I think most people want to make sure that they have a nice retirement first. But I always say there's usually something left over. How do you want that to go? Do you want Uncle Sam to get 40% and the rest goes to the kids? Or you want the kids to get 90% and Uncle Sam get 10%?
All right, Mark, how can people reach you?
Oh, we're always here at the office. You can always email me directly at Mark.K at CherokeeTaxGroup.com. You can call the office 678-981-6331. Obviously, we're here in Woodstock, Georgia, but I'll be honest with you, Patrice, we've got clients all over the country. But usually email and call the office, talk to Kim Vickers, our office manager. She's been with me for, almost since I threw out my shingle. She's the best. And if you can't get a hold, if she's busy, you can always talk to Christina Lorcher. She is our managing partner on the tax side, and she's really my go-to. I hate to say she gets some of the grunt work, but we work on a lot of these things together. She should probably come on one of these shows one of these days. She really has a lot of insight of the taxes and the things that people say. I stick my head more on the planning side. I don't need to crunch the numbers. I can look at a return and know when something's wrong. That's kind of the advantage of having done something for a long time. Kind of like a doctor who's, does the same kind of treatment. Like even if he just does, what do you call it? Appendectomies. He'll know when something looks wrong and something looks right when he's poking around and then there's something wrong more to this. This is not a normal appendectomy. The same with me. I could look at a tax return and go, something ain't right here. Something don't make sense.
And what happens when you say that to the person who's giving you that tax return?
Oh, of course they go, well, what's wrong?
Yeah.
And, you kind of scratch your head and like, well, I can't, without looking at, and I always tell people like, they'll show me a tax return. I go, what do you think? I'm like, well, without seeing the backup, I don't think anything, but you start looking at it going, well, what are you doing with these dividends? Are you reinvesting them or are you using them to put food on the table? What are you doing with this? Are you reinvesting? So I think a lot of people make the biggest mistake of investing the wrong money in the wrong types of accounts. And that's the first place where we started saying, okay, we all want to make money. Great. We want to make money. We don't want to lose money and we don't want to pay taxes. Okay. Well, that defines what we need to do next, either what investment tools you need or how you invest your money in what kinds of accounts.
And that is Mark Kanakaris of the Cherokee Tax Group. This is the Tax Endgame. Make sure you know when new episodes are ready by subscribing to the podcast, and of course share with others. I do think they will appreciate it. I'm Patrice Sikora, and let's talk again later.
Thank you for listening to the Tax Endgame with Mark Kanakaris, the podcast that shows you how to win the tax game. Have questions about topics covered during the show? Visit www.cherokeetaxgroup.com. Email us at info@cherokeetaxgroup.com or email Mark directly at Mark.K @cherokeetaxgroup.com. You can also call us at 678-981-6331 to set up a free consultation. Don't forget to click the follow button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the hosts and or guests and does not necessarily represent the views or opinions of Cherokee Tax Group. The content has been made available for information and educational purposes only. The content is not intended to be a substitute for professional tax advice. Always seek the advice of your financial advisor or other qualified financial service providers with any questions you may have regarding your individual situation.